Hello and welcome to the weekly wrap video. A couple of things to catch up on from the past 5 trading sessions then. It's been a very much geopolitical and macroeconomic driven week. First of all, we saw a very heavy risk-off tone as those Russian-Ukrainian tensions continued to raise higher and higher, as it did come close to the point where markets did believe that the Russian President Putin could order his troops to in fact annex the former Soviet state of Crimea and take it away from Ukraine and back into the Russian Federation. However, as we came to market on Tuesday, Russian President Putin put a halt to all of these war games, bringing their troops back to their bases and allowing markets to soothe somewhat to erase all those losses by the end of the week. However, this is not the end of the geopolitical uncertainties in the area, as the Crimean Parliament this week voted unanimously to secede from Ukraine and rejoin the Federation of Russia. But this is still subject to a referendum among the Crimean population on March 16th. So that's another date for your diaries. Then over in the Eurozone, we had, of course, the ECB rate decision on Thursday that was quite uneventful, where markets were actually looking for an announcement of extraordinary monetary policy from the ECB, potentially taking the form of an end to the sterilisation of those SMP purchases. As such, the euro rallied, with fixed income markets and equities coming under pressure on the continent, with euro actually touching on 2011 highs in the early Friday session. And then as we headed in towards Friday, of course, we had the big data point of the week, the change in non-farm payrolls. Everyone was expecting a rather downbeat figure, with the market prepped up for disappointment. However, this was not the case. We saw a figure of 175,000, beating the vast majority of analyst expectations. This coupled with an upward revision and the fact that the weather did not really have an impact on jobs, but just actually average working hours, allowed the S&P 500 to touch an all-time record high on the Friday alone. How this does continue to clarify the picture for the Fed, keeping them on track to continue tapering by $10 billion per month, whereas some market analysts had actually seen a potential pause to the taper program due to the slowdown in economic data since the start of the year, as those adverse weather conditions in the northeast continue to depress economic conditions. Other than that, though, we have gone through some pretty tumultuous events this week. Next week looks to be ever so slightly quieter, with earnings seasons on both sides of the pond really coming to a conclusion. But we do have a couple of flashpoints, the likes of Chinese new yuan loans data, as well as German CPI, German trade balance, UK industrial and manufacturing production figures, and of course the Bank of Japan minutes. So bring you all of those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.